extended periods of unemployment. What term life insurance can do all that? Western Reserve Alliance Advantage Term with living benefits. No other term insurance product bundles so many solutions to life's unexpected problems. And all in one policy. So for more information, call Brokers Alliance 1-800-290-7226. Stop selling the old term. Start selling the new.
Well, welcome back to the Business Insurance Zone, the talk show that focuses on insurance in your practice. I'm Steve Savant, your host, financial color commentator, and interviewer extraordinaire. Hey, with us in the second segment is Susan Carlson again, our LTC gal. She knows all about it, long-term care. If you want to buy individual contracts, you can call Susan, 1-800-290-7226, extension 140, or write her, susan.carlson@brokersalliance.com. And I just want to remind everyone that you can watch this video of all our shows, or any of our shows, on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, brokersalliance.com, and of course check us out on all our social networks, Facebook, LinkedIn, Twitter, and the Insurance Forum where I blog. My email address on the show is thebiz@brokersalliance.com, and you can call me at 1-800-290-7226, extension 147, for any of your quotes or questions on life insurance, DI, LTC, annuities, or group pension plans. And remember, I'm not a tax or legal advisor, so before moving forward with anything that you hear on our show, don't forget to talk to your CPA, attorney, or if you're with a broker-dealer, your compliance officer. We have to cover it all here. Well, Susan, when we're talking about it in our second half, I want to talk about some of our players, because this market has really shrunk.
Yes, it has.
And I want to know, who are the LTC carriers that are out there right now? I mean, some of the big names that you like, some of the contracts that you think have some really great provisions to talk about. Let's go through that.
Absolutely. I see the long-term care industry really following what the disability industry went through. Originally there were hundreds, I think 200 and some companies selling disability. Currently, if we look at it now in true brokerage, there's only a 20 or so. And the same thing is happening with long-term care insurance. Some of the major players, and I can speak more to the brokerage side than I can to the captive side, but of course we have Genworth Financial, number one carrier, been in the business the longest, has
now, why
the
do you say
largest
number
block.
one, though?
To me, they're number one. They had the largest growth last year, and they have the largest block of business because they have acquired other companies, and they have been writing long-term care since, I think it was the late 70s. So they truly
they've been around.
understand very much.
And you say they're a monster player in this.
They are.
Okay.
They
Who
are.
else?
We have John Hancock, of course, who has actually made a couple of announcements. They're working on their product and what their actual market's going to be. We have Prudential, who has a very nice product. We also have a company called Life Secure, which is owned by a Blue Cross of Michigan. Very unique, simple approach
Well, let's talk about Life Secure for a second, because that I was doing fine. I think all of our agents and our advisors have all heard Genworth, Johnny Hancock, Prudential. These are all big names. But Life Secure now, that's a different one.
It is, and they are newer to the market, and I don't think it's so bad to be late to the game because they can see all the mistakes that have been made by some of the carriers.
When there's been plenty.
Yes, that they're having to pay for. But Life Secure, again, it's a Blue Cross of Michigan company, and I like their approach because it's very simple. You just choose a bucket of money and how much you want that bucket of money to pay out per month, and then and whether or not you want inflation. They also do a dynamite job on the work site. So if you're looking at writing long-term care within a work site, they are 100% online. And they do some nice underwriting concessions. So it's a product not to be overlooked.
Okay. Anybody else on your list?
There's a company called MedAmerica that is very unique.
MedAmerica. There's another new one for me.
Right. They've been in the business for a little while, but they have an approach of a pure cash. So it's like a disability plan. So you would just get paid or just get reimbursed your $6,000, or it's not even reimbursed, pardon me. You would get paid your $6,000 up front. You can use it any way that you want.
So it's an indemnification.
Absolutely.
Right.
Absolutely.
Policy. And I'm curious, because you are so deep in this stuff, Susan. when you look at a indemnification cash only like this one from MedAmerica,
Okay.
and compare that to a traditional payout, where they just take care of the bills and so forth and so on, what's the yin and the yang? What's the good and bad about that?
Well, I could debate either side, whether or not it's easier to have a cash because you're not dealing with receipts versus your traditional plan is they are a reimbursement. But what's nice about the reimbursement plans is that you can have whoever it is that's providing the care automatically bill. You can assign the benefits and you just get copies. However, with the cash plan, if I'm out of the country, we write a lot of individuals who will live half time in the United States, maybe the other half in Switzerland. Cash product is perfect. Also, with somebody who wants flexibility of who they can hire, they might know somebody that they want to be able to provide these services and not have to deal with an agency. And so there's a lot more flexibility on the cash side.
Who else then? Besides, that's pretty good one to know.
Well, and we have the Omahas. We have Mutual of Omaha and United of Omaha.
Are they actually different contracts?
They are. They're very similar,
How
and they're
strange.
all under the sister company.
Wow.
And very similar, but it just they kind of have their niches depending on the age and whatever benefits that you're looking at. But Mutual of Omaha and United of Omaha have put a lot of resources behind their marketing, and they're really reaching out. And what's nice about these companies is if you have a client that might have a Medicare supplement policy, they will give a discount on their long-term care. So it's a great reason to reach out to those Medicare supplement clients.
When I think of marketing, strictly on the issue of marketing, I mean Prudential, huge name, everybody knows it. Everybody heard of John Hancock. Genworth, huge. But then when I think of United or Mutual of Omaha, I think of Carl Perkins and the Wild Kingdom. Everybody that's my age and older, which is our big target audience for long-term care, not only agents, right, but also the actual client. I think of that, and I think of the Mutual of Omaha of people who've been around forever. So these are big names,
They are.
a lot of these big names. Anybody else you want to add to your I Love You list?
Well, there's a lot of companies that we can't represent, like your Northwestern Mutual, your New York Life, your Mass Mutual, and they all have very terrific products.
Let's talk about that just for a second, just to give them their due, to say that I'm not a complete mercenary out in brokerage. I'm looking at, like, for example, Mass has a decent DI out on the street. Is that going to be competitive? Is that pretty good competitive against some of these big names that are in brokerage?
From my understanding, it is. It is. It can be very competitive. It has some unique features in it in which you can actually have a third-party owner with a Mass Mutual product. So depending on if you're doing some type of estate planning or business planning, the Mass Mutual product might fit nicely.
Anything that maybe New York or Northwestern might have on their portfolio?
I think more of it's the company's strength, the company behind
They just
the
want
product.
a size issue. When I think about long-term care carriers, and I think about the strength of some of the big names that we've just put here. I mean, these are billion balance sheets big.
Yes.
I mean, huge players. Anybody else before we get into talking a little about maybe about a contract or two here?
There's also Transamerica.
Transamerica.
Yes, who
The
has
pyramid.
a very nice policy and some nice on the underwriting. There's a couple scenarios where they're very competitive.
I've noticed that there are several other carriers that we haven't mentioned, and so it's not that I don't want to talk about them. It's just that they're just really not major players yet. And when we talk about it, we're not just talking about the actual long-term care sales through Brokers Alliance, but we're looking through the Long-Term Care National Association that you play with, and these are the carriers that really are dominating the bulk of the market.
Currently, yes.
Okay, so it's not like we're trying to X somebody out here. It's just that these are the ones that are really writing the numbers.
Correct.
Now, not that we want to be favorites on the show here, Susan. We're trying to be a bit objective, but I know you have your favorites and some of the ones that you like to play with. Talk a little bit about some of the ones that you say, this fits in this scenario or this situation, why we'd want to go down that road.
Okay. Well, my favorite has to be, of course, Genworth Financial. One has to do with their history. They have always steadfast on their premiums and their underwriting. They do have very thorough underwriting and have a policy that is really designed for a husband and wife. And they have a couple of benefits that are automatically built in versus being a rider like they are with some companies, and also with their claims paying. I know as a broker, I get so caught up in what the policy looks like and what the premiums look like that I forget when the rubber hits the road what really matters, and that's the claims department. Bar none. Genworth Financial has the best claims department in the industry. And to me, that's what matters. I want it simple, I want it quick, and I want it fast for my clients.
You know, on our next interview, I want to pound that whole subject into the ground on claims and underwriting, because I think that's a huge issue to talk about.
Yes.
So they win on the claims. You like that claims paying ability. What about these other players? What are the perks on their policies, or any specific reason why you like them?
Well, Prudential, you have the name. You've got the name of the company behind them. And they have a couple features where you can get some cash in lieu of doing a reimbursement plan. So maybe in the beginning stages of home health care, I don't need to hire somebody in. I just need maybe somebody to come in, help me around the house. They actually have a cash option. They're also...
could you use that cash option within the relatives, within your own home?
Yes.
So if you didn't want to go to a nursing home, you could stay at home.
Right.
They'd send you a check, and you could actually pay like your kids if they were helping you.
Exactly. Now, it's
Are there
just
rules
a portion.
to engagement to that?
Just on how much cash is available. So you usually just get a portion, but you can always switch over. So maybe initially the kids are taking care of the family, and then we need care more substantial, so we hire somebody. Prudential is also one of the few companies left in true group. It would actually be Genworth Financial and Prudential. And also just on the work site overall and with their associations, they do a very, very nice job in that arena.
Is that really an expanding area, group LTC?
Well, I think it depends who you talk to. Where I see the market is being more on carve-out individual plans, not your true massive size groups. That type of market is just a whole nother arena and has a whole different approach. But where I see the market being opened up is when we want to do something like an executive carve-out. We're using individual plans. We're going into law firms, medical. That, to me, is where the market really is. And both Genworth and Prudential do a nice job in that.
Now, I know that John Hancock's is really reconfiguring their product now.
They are.
And do you expect have you heard any beta information yet, or anything news?
You know, I take everything with a grain of salt, but what I've heard is just that they're retooling their product. They're making it simple and easy, and going off, trying to opening up their distribution. Looking at more than just the financial advisor or the long-term care specialist. So they're kind of hanging low right now, doing some changes, and expect them to come back with a bang when they're ready.
Well, when I think about these companies and their carriers, that's we're looking at about 8 carriers here that are our core carriers that are players in this market. And we're talking when we're talking about long-term care today, we're talking about not a linked benefit. We're talking about stand-alone contract, whether it's from indemnification or reimbursement. There's a lot of options here, and I think if you want to call for a quote, please feel free. Remember, 1-800-290-7226. Susan's extension is 140. Well, Susan, I want you to thank you for being on our show today. And I always enjoy our long-term care discussions because I know very little about it. And you can call us anytime you want and get a quote. Write me at thebiz@brokersalliance.com or hop out to our website at www.brokersalliance.com. I'm Steve Savant, and you've been listening to the Business Insurance Zone. That's the buzz on the biz. Get into the zone. The Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse and Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. You can contact Brokers Alliance at brokersalliance.com or 1-800-290-7226, extension 147.